Hello, everyone. I'm Roy Coachell, your host, and this is The Integrity Project. And welcome back. I have a guest of mine, good friend, who's the president of Westboro Mortgage Investment Corporation, Derek Serra. And Derek, you and I have become very good friends over the past couple of years. And I just wanted to come in and have a little chat with you and talk about the mortgage industry and where we see a lack of integrity. And you're probably one of the most honest, and we have some pretty deep conversations about the business. So let's get started. Sarah, why don't you just tell us a little bit about yourself before we get started here, and then we'll dive right in.
Yeah, sure, pleasure. And so I'm Italian by background, so I generally have most Italians who are under 6 feet tall. So when I met you, and then I met your brother, and I'm like, what part of Italy are you guys from? What were they feeding you in that part of the world? But so I've been a banker my whole life, and left the bank after having been the head of the mortgage sales force in Toronto for many years, and was in the alt and monoline business for 3 years after that, and the last 5 years at Westboro running a private lender that lends right across Ontario.
And what a wonderful job you did over there, by the way.
Thank you.
You run a really good ship. You have great people.
Thank you.
And you know what? And it's true that when you build a relationship, I can pick up the phone, give you a call, and it goes both ways. We want to make sure that we give you business that's going to make you profitable, and at the same time, we want to make sure that you can get deals done for us, which is great. So thank you very much for all the hard work you've put in, and I know you've helped me out a couple of times. So thanks very much.
Pleasure.
In your opinion, where is integrity most often compromised in the mortgage process by brokers?
Yeah, it's a good question. I saw some of the questions you'd sent before, and I was just thinking about like integrity in our business. And I think one of the key ingredients that's changed over the years is the accessibility to information. And so I was just saying to someone the other day, and I'll date myself, I guess, a little. Like when I started working at the bank, believe it or not, we didn't have email. We didn't have the internet. Like my first few years working there, everything was done with the triplicate pages, and you'd sign with the carbon paper and rip them apart and balance everything at the end of the day. And so when it came to advice, advice was really kind of face to face. Like you really couldn't find that advice otherwise. There wasn't just easily accessible right on your phone. We were talking about our phones before we started, and now literally everything you think you need to know is available on your phone. And so I think that like from an advice perspective, and from a kind of shopping perspective, one of the things that is important in this industry and in any industry is people's time, right? And so if you're going to shop things around and spend a lot of people's time doing a lot of different things, and then you're going to take it on yourself to shop because you feel like I have access to Google or AI or whatever, I think in some cases it takes away from the experts that are available that at one time were the only place you could shop were people. And now with all this access to information, I still would say things have come full circle. There's so much access to information that's there that now you need a person to disseminate all this information that you got at your fingertips, because there's just so much of it and so many opinions on it.
So listen, we all know that the mortgage industry has been around for a very long time. As a broker, the broker world's getting more and more market share. We find a lot more difficult, a little more competitive. Banks are trying to fight back with us now and things like that. And if you have a piece of advice for somebody who wants to become a mortgage broker, get in the mortgage industry, what would that be?
Yeah. So, I love this business, right? I've been in it my whole life. And I've spent a lot of time with a lot of mortgage specialists who have now, the majority of them have migrated from banking into brokering. And so I watched them grow up. I watched them transition from other jobs into mortgage specialist world. And I helped a lot of them through their careers as their boss or their coach or whatever. And they helped me learn along the way as well. One of the key ingredients in this business is advice. And so that's not something that you can just kind of flip a switch and learn. So one of my kind of key pieces of advice to anyone would be, surround yourself with people that you know, like, and trust. I talk about that a lot as a lender, and that's what I expect from my partners. But as someone new in this business, I would find the person that I want to have a career that looks like and go work there, and let them lead you through the path of what made them successful. Because the one thing about this business is all of the old prophecies are true, like the 90-10 rule, the 80-20 rule. In this business, it's 90-10. The top 10% of our mortgage brokers drive a massive amount of the volume, and they do it with class, with etiquette. They build rapport like we have over time. Height distinction aside, we've still been able to build our rapport. But I think ultimately, it's doable. All those things are doable if you have a really good way about you and the way you communicate. And then your systems and processes with clients. Like if you're organized, it'll show through on your work. And so for somebody new in the business, you find yourself a mentor, join a really good team. Like you have great people on your team that you guys work really well together. It's that environment, I think, that's going to expedite the person's time in the business if you can be around good thought leaders.
Yeah, and I find the hardest part for people now is the fact that, in this industry, they've allowed so many people to come into it, and there's so many people have no business being in the business. And I firmly believe that they need to make it more difficult. And I've been grandfathered. I've been doing this for almost 30 years, and maybe I got in it was a little bit easier to get into, because when I first started, I think when we go to broker events, there'd be like maybe 150 people there. There wasn't a very big industry. Now there's tens of thousands of mortgage brokers across the country. But I also think that there's not enough education to make them professionals. Like if you want to be a financial planner, you have to take, your certified financial planning course. You got to take all these things. And our course is like 2 weeks, and most of it teaches about compliance. But they don't. Also, I find that when it even comes to FSRA, they're not strict enough. They're not intense enough in order to make penalties hefty enough that people will be deterred from breaking integrity laws. Like I hear this all the time. What's the big deal? It's not hurting anybody, right? Like if you get a piece of fraud into your book, right? And I think that our business is built on trust. You trust I'm telling you the truth. I trust the clients telling me the truth. And you trust the fact that together they're going to make payments and make your investment profitable for you and helps out the client. But when that trust is broken by fraudulent paper or not telling the whole truth, how does that make you feel as a lender? Like at the end of the day here.
Yeah, you know what? And so I've been talking about this my whole career, and I used to talk at the bank where this all kind of started with these conversations around the underwriters that you rely on to give you the speedy turnaround time, to give you the approvals, to get you sometimes the exceptions you need. They are humans. And so we got to pause and think about that for a sec. As a human, you don't forget very easily the people who were easy to work with. And you also don't forget very easily the people who may or may not have done something that you spotted was an issue. And so I'll give you just a couple of, like one little easy example on this without getting too detailed into fraudulent things and whatnot, just to simply say, we see often, because we're a big enough lender, that we'll see a deal that will come in from broker A, and then we'll get the same deal in from broker B. And then the broker A, it's Roy. We know Roy, and the story is the story. Like the guy lives in Oshawa. He's buying a condo in, Jane in the 401. He lives in a 4,000 square foot house in Oshawa. He's not moving to the condo at Jane in the 401. That's going to be a rental property.
Right.
And so Roy tells us the story. That's the story. And then we get another deal in, and all of a sudden it's like, oh, the guy, he's got too much space in Oshawa, so he's going to be listing that property and or renting out the Oshawa house, and he's going to be moving to the condo at 401 and Jane. And we know why people say that, right? Because in some lenders, private, not always as much. I don't know why it makes it all the way into the private space, but at other lenders, there are premiums you have to pay from a rate perspective if you disclose that it's a rental.
Right.
So the underwriter who sees both of those is not surprised that our friend who's been doing business with us, regularly on a regular basis is legitimately telling the truth, and potentially is going to maybe have a little bit of a higher rate because it is legitimately a rental. And the other person, it's kind of like you look at it and you say, I don't know that this passes the sniff test in which you've kind of disclosed. Does it hurt anybody? I don't know. But what I can tell you is the next deal that comes in from Roy, the underwriter is going to grab it quickly and say, that's the one I want. And the one that comes in from lender or broker B,
Yeah.
it's immediately going to come in with a kind of an eyebrow up, or, whatever you're going to do it in the way you're going to just give it a little extra scrutiny. As a human being, you can't see it any other way. And so I think that ultimately, to have a long career in this business, you have to remember that those underwriters will work in different worlds. They'll work at different lenders. They might be an alt today, private tomorrow, the next day. They might be working at a company that eventually gets bought by another company, and the two companies come together, as many have, and all of a sudden they're working at the biggest lender that you do most of your business with when they were working at maybe a smaller lender before. They're going to remember that time when you said this was the story, and that's your reputation. And I think that it's an important one if you're going to be in the business a long time and be very successful, the way that top 10% are, to be very careful with what you might deem to be a gray area when it could just legitimately be, this is what it is. Let's just be honest about it, because we all kind of understand what it is.
And I think people think that just because something's gray or may have a little dent in it doesn't mean the deal's dead. I think that, I mean, like for me, people say, oh, if we say this, we say, look, I don't do business that way. I tell them everything. It doesn't matter whether it's TD or Scotiabank or Westboro. I tell the truth, the whole truth. And then if it doesn't fit for you, that's okay. But I know that there are not going to be any surprises at the end, because that's what kills a deal, right? At the end, you find out last minute or something like that, where it's like, hey, listen, this puts everybody under pressure, puts a client under pressure. Well, I'd just rather just tell the truth, allow you to make the decision based on real information, and you can assess the risk whether or not you want to take it or not. It's only fair.
Roy, it's what makes you with my company a valued partner, right? Like, you're a partner in our success. You're going to make sure that Westboro is going to be around 3 years from now, 5 years from now, with the integrity that you bring to the deals that you submit and your team does. And most people do. It's that peripheral world where they're just kind of, I don't know if it's a lack of deal flow, if it's a lack of training. There's a variety of reasons why things don't always kind of go soundly, but ultimately it's very short-sighted for people who are going to kind of not necessarily be transparent and then ask for partnership. I don't think those two things go hand in hand. A partner is someone who says, you had a great year, we contributed to that, and we're really happy for you on both sides of it. And I think that's a key ingredient for me as I've built Westboro, is to really kind of surround and provide the best service I can and my team can to the people who believe in partnership.
Yeah, and you guys have your niche, which I appreciate. There's no blurred lines. I mean, if it's close, we can make a call, obviously. But it's just like, we know we don't do these, right? Whether it's max loan amounts, certain properties, whatever, at least we know that. And it makes life a lot easier that way, where people are like, I don't know, let's check it out. Maybe we can do it, maybe we can't. And then you go through the whole process, and then you find out 2 weeks later, oh, we can't do it, risk won't take it, right? But where do you find that when most people value the commission check or the integrity of their business?
Yeah, again, having been around commission salespeople my whole life, it's certainly, you kind of have to, I would reserve kind of my thought to say compensation drives behavior. So I most always say, if I'm looking at an org chart for a company, I'm looking at, whatever we're discussing, show me the way someone's compensated, and I will kind of let you know how they behave based on the structure of their compensation. Some compensations are multi-layered, with some commission, some base salary, and so on and so forth. So I think you cannot remove compensation from any conversation, but I think that people who take a step back and understand that their brand is also linked to their compensation in the long run, when they understand that, then they're never gonna necessarily put their integrity at risk for a paycheck. But those who don't see it that way, they'll run hard. They might get a few things done and steal a few deals from others that they didn't. But I'll tell you, as lenders, when we're kind of sitting around talking and those certain names come up, everyone kind of, no one says anything, but everyone kind of makes that eye gesture, and that's the one. And that's probably not the person who's eventually going to be coming in for the exceptions or have the conversations that you and I have about how can we make this work? What do we need to do? It's likely going to be the underwriter who's looking at it saying, oh yeah, I remember that guy. And so it just really depends on how you want to set up your practice moving forward, and your brand moving forward. And I think that's a really big part of having a partnership with the key lenders you have to have. Because, my question to you would be, if you're a mortgage broker and you don't have any lenders that like you, what do you do for a living?
Well, I tell my agents, my team everywhere, you can always find a new client. It's hard to get another lender.
Absolutely.
Because there's only a certain amount of lenders out there, and there's a lender for everybody. And the thing is, I don't understand is why people just don't do their proper due diligence. Talk to the client honestly and tell them exactly what it is and where they fit and why they fit. I think that most clients, especially for me, I find that like in the beginning of this year, especially all banks are so competitive now, and there's certain brands that are like undercutting all of us and all this kind of stuff. And I took a different perspective. Like, what do people really actually want from us? Number one, they want advice. They want the honest truth, and they want to understand where they can fit in the situation they're in, whether they're self-employed, bruised credit, and we know that a lot of people may be overextended. How can we get them through these things? And I think when you really are honest about exactly where people are and they feel comfortable with you, then they trust you. And if they trust me to make sure they get things done, then they can feel comfortable exactly where they're at. There's no point in, we were talking about this earlier, there's no point in trying to slide somebody in a $800 or $900 million house making 80 grand a year because they think they want one. That doesn't make any sense in how they're going to afford it. And we talk about affordability a little bit earlier today too. And I think that people's mindsets nowadays is they don't need to own anything and they'll be happy.
Yeah, it's a big shift. It's a big shift, especially, given our kind of new to Canada in our past, where when my parents came to Canada, it was the immigrant's dream. Like, I have to own a home, and my home is my where I host my family. I'm very proud of that. And it's evolved now. I don't even know that people necessarily want to have a family anymore. Like, things have changed, and it's okay.
Yeah.
But I think acknowledging the fact that times have changed quite dramatically, not looking back at past trends to dictate the future, is a key ingredient to the path forward as a broker, as a client, as a lender, as a Canadian. You kind of have to read the tea leaves and understand that we talked a little bit about COVID too, like post-COVID, a lot of people see the world very differently. And it doesn't, just because they don't see it the way we see it, doesn't make them wrong and us right, or vice versa. It just means it's different. So I don't think you can look at trends from the past 10 years and dictate what the next 10 years will look like. I think there's been a major shift, and we have to really kind of pause and say what the next 10 years might look very different. And we can't necessarily be as predictive as we've been in past, whether it be the condo market or the cottage market or whatever's happening with people, snowbirds buying places in Florida. Now there's this whole shift. I was talking to a realtor talking about the cottage market's gonna maybe pick up this summer. And I looked at him and I said, really? And he's like, well, a lot of people don't want to go to the States anymore. Like, whoever would have seen that coming? So it was, for me, it's been 20 years of snowbirds, and the dream is to eventually retire and buy a house in Florida and spend 6 months there. And now people are saying, I don't even want to fly over the United States, let alone, not me personally, but others would say that. And so now all of a sudden you've got people bringing capital back to Canada and potentially looking to buy a cottage or something. So times have changed.
Yeah, but you gotta understand, like Donald Trump, and he's going to be in power for another 2.5 years. And then when he's gone, things will change. And all of a sudden it was like, well, you know what? In that case, maybe 3.5, 4 years from now, people want to go back to the US. So they're going to be selling and liquidating their cottages. I think when it comes to home ownership, I think that people talk about, the affordability issues. And yes, houses are definitely expensive, but rates are a lot lower. And I remember when I first bought my house, and it was $325,000 for a brand new Mattamy build, 2,500 square foot detached. My parents are like, holy, how are you going to pay for that?
Yeah.
Right? Like, how are you going to pay for that? But we did buy it, and we did pay for it. And I think a lot of the attitude of buying a home isn't about home ownership to own a home. it was investing in real estate. I think the speculative portion of it is the thing that destroys it all. Because people say, oh, housing prices are going up, so I'm going to buy today, sell it for a big profit tomorrow. And people were doing that. And then all of a sudden, more and more people speculating, right? And that's what killed the markets in 1990s, in 89, 90, 91. People buying condos or brand new homes and selling it to the guy in the back of the line for 20 grand more.
Yep.
And that's what everyone thought they were doing. Because if people were actually buying it for end use, you wouldn't have that surge in price.
Yeah, with the whole speculative world. So like, if I go back even say 15 years, there were a lot of people let me start by going back 25 years when people only owned a home. Like the majority of Canadians had a house and rich people had a cottage, but that was kind of it. Like the rest of your investments and the rest of your kind of retirement plan was in an RSP. It wasn't necessarily having bought condos that you were going to then all of a sudden become a landlord and need a holdco to do all these things. Then you fast forward to the condo boom, and people rightly, I think that's the part that people forget today because things have changed quite significantly, but people have made a lot of money. That $325,000 house you bought, what did you sell it for?
Well, I thought for $365 a year later, but if you looked at it'd probably be worth $1 million right now, maybe a little bit more.
But even 365, you make 10 points, within a year.
Yeah.
Like who's making 10%, tax free in a year of just having bought and sold a house that you kind of thought you wouldn't be able to afford. So the condo world has been one where people were buying these condos downtown Toronto, $165,000, $170,000, $180,000, flipping them 5 years later once they're built for $400,000 or $500,000. And so they rightly bought another one and they did it again. And then the problem is that people started to get greedy.
Yeah.
And so then it's like, well, I'm going to buy one and then I'm going to get my parents to buy one and then I'm going to get my brother-in-law to buy one. He can't qualify, so I'll sign on his with him as well. And then we're going to get 4 of them in here because this is what's going to happen. We're going to retire on this condo project. And then all of a sudden the music stopped. And this whole kind of reality of you need to be able to qualify for this debt. And even if you go back in time to those mortgages or properties you bought for $365,000, you could always almost rent that out and it would carry. But when you're buying pre-con now at $800,000 or $900,000, like a $700,000 mortgage is not going to carry unless you have a $6,000 or $7,000 a month rent payment. And those are tough to come by as well. So for those of us on the lending side who were watching the tea leaves change, that's where, for me, I started saying, no, we're not going to go to 80% on your rental properties 2 years ago. And no, we're not going to do 80% on your condos. Many others did. And, their paths forward now will be dictated based on the decisions they made 2 years ago. That's the way lending works.
Yeah.
But I think you've got to be super careful when you're providing people advice to say, you got to remember, this is not necessarily going to be easy street. And so when you buy these 4 condos and, you're a police officer, you have a great income, you have a great pension you're looking forward to, but I don't think you have the residual income to carry 4 extra condos. I don't think anybody has that kind of income.
No, and I think that with rentals, I mean, even back in the times of $365,000 homes and condos, I don't ever remember anybody's rent being positive cash flow ever, unless you put unless you put in 35 or 40% down. It's the only time you'd actually be positive cash flow in a condo or in any rental. And it's fine if you need a tax write-off. It's fine if you're looking at capital appreciation. And I remember the only place you would actually break even was in Hamilton at the time when I first started, right? You'd buy a place for like $80,000 and you rent it out for $1,100 and you're making money.
Yeah. And then all of a sudden the hammer is now $800,000. Like,
right.
The times changed, but people just kept hearing Hamilton.
Yeah.
And so Oshawa. And Oshawa, you could, same idea, $200,000 or $300,000 houses. Now they're $1 million. But it's still Oshawa. Like the economics of a rental outside of the city are different than the economics where you have public transit and whatnot within the 416.
Yeah, but at 416, even though the higher prices and you were hoping at capital appreciation, but I remember 15, 20 years ago, you would always be upside down, $300 or $400, $500 a month. Didn't matter what the math was. If you're putting 20% back, then you can actually insure it. You can go to 90% loan to value. And if you add it all up, they'd be upside down, $300, $400, $500 a month. And people still were doing it because they were hoping for the capital appreciation that did come. But now the music stopped. Derek. And I think that everyone has a bad taste in their mouth about real estate now because they got kicked in the nuts pretty heavy, right? It's like anything.
Well, I just to pick up on what you said earlier too, though, like that one of the things that drives me crazy in this business is when people use the following phrase, the point of least resistance. And for anyone who knows me, in any part of my life, I am never the point of least resistance. I will give you some resistance on something every single time because in many cases, when you're making these very difficult decisions and you're giving people advice, it's not meant to be easy. It's not meant to be, oh, just sign here with no documentation and an attestation form and away you go. No, I'm going to be the one who says to you, are you sure these clients can actually afford this? Are you sure that you've socialized the idea that this could happen 2 years from now? Because that's really what we're intended to do with these customers, is to have these kind of conversations, not stack them with first and second mortgages. And then you find out down the road that they didn't realize that this is what could or should have happened. And you've moved on, in your career of providing people mortgage advice, and you've got people who maybe needed a bit more advice. Now, you can't stop people from making decisions. The advice only goes so far, but I still feel the advice needs to be given. And I also feel that, where you've got other kind of lenders who are willing to provide those solutions that may or may not be always in the client's best interest, those are the ones that make me worry about what the future of kind of that landscape will look like when you've got so many clients that are in products that you and I would have looked at it 2 years ago and said, you don't need the property to go down 20% in value. I can tell you 2 years ago, you shouldn't have done this. This is out of the league of what makes sense. And just because it's the point of least resistance doesn't mean it was necessarily the right financial advice.
Oh, absolutely. I remember people come in and they're like, hey, I bought this place. I went in firm and I'm like, I'm not doing this deal.
Yeah.
I mean, what am I going to do with this? You bought for $900,000. You're an Uber driver, and your wife works for minimum wage, and you think you're going to rent out the rooms. And I said, I'm not doing it, because I'd rather say no to somebody, and I'm not trying to be a dick or say I'm higher than everybody. Like, for me, that deal's not that important to me. I want to make sure that the client fits my integral box. I don't try to do things that are outside my realm. And most of my clients are referred to me for other people. So like, if I believe in them and I call you and I'm fighting for them, it's only because I believe that they have the capacity to take care of it. If I didn't, and like people call me, it's like, well, how come you're not sending me? I said, because the business that I get that would fit in there, I would never send it to you.
Yeah.
And I'm okay to say that to people. Like, I can't help you. Where everybody wants every deal. Like, I have guys want to do commercial deals. I've never done one before. Right? And I say, like, just pass on to somebody who's done it before. And now the CMHC, MLI Select program, everybody all of a sudden wants to get into it. Like, I don't do them. They ask me about them. I know just a little bit enough to kind of get me by. But if it's not something you do on a regular basis, or you're not going to take the time to learn the skills to do it, pass it on to somebody who can.
Well, and part of it is if you go back to the sales training part of being a mortgage broker, being a mortgage specialist, being a salesperson in anything, being a realtor. One of the key ingredients that you guys are all coached and trained on is your CRM, like building this CRM and sending birthday cards to their dog. Hey, it's your 1 year anniversary from since you got your dog. Hope you guys are doing well. I was so happy to have helped you with your mortgage. All these touch points, right? But what I've found and what I hear from my friends who are brokers is your CRM, just as you had outlined, is very interconnected. Like, so your CRM will have the 7 degrees of separation of this is how I got this guy, and this guy knows this guy from this person, and this couple knows this person from these people. And in time, you're going to build a CRM of people who they may not all know each other, but they are all kind of interconnected some way or another. And so I'll tell you, if you've given somebody terrible advice, or you've given them this point of least resistance that in the end turned out to be really not great advice for them or their family, sending them a birthday card isn't going to fix it.
No.
And when they go on your Google review and kind of suggest that this really hurt them or their family, or they let others know that this was really something that caught them by surprise, I'm not sure that that's not going to stop its way from making its way through your CRM. And all of that work you put into building that CRM went where? So I think ultimately, you've got to marry the business with the long-term thought process around what you're building here. You're building a brand. And that brand should be one that you're proud to be sending out ideas and information to your CRM. But it can also backfire if you start going down this path of not necessarily kind of holding your integrity and holding your truth as it relates to the advice you're willing to provide. And it doesn't always mean people will listen. That's the part that, brokers are like, I told them, whether it be creditor insurance, whether it be overextending, whether it be getting a HELOC, all these variety of things. You could be all the greatest advisor you'd like, Roy. And ultimately, I still think people will have an opinion, which they're entitled to. It's their money.
Yeah, but people want to hear what they want to hear. Like, they don't like to, like, you tell them, like, you should, like, let's go through your situation. Here's what your options are. This is what I think best suits you from what you told me, all this kind of stuff. But they don't want to hear, they just want to hear what they want to hear, right? They want to hear that they can get a rate of 3%. They want to hear that, they do qualify for that. And you're trying to explain to them, like, the only way you're going to qualify is in a position that's going to hurt you and not actually benefit you. And people are funny that way because, you know what? We all do it. Doesn't matter who you are. You only want to see and hear what you want to see and hear.
I can tell you in the private lending space. So, I think most people listening would have a mortgage or near getting a mortgage, and a bank mortgage is a bank mortgage. An alternative mortgage is a little different than a bank mortgage, and a private mortgage is very different than the other two. And one of the key differences in a private mortgage is the fees that are associated with getting a private mortgage. And so, just even this morning, I was back and forth with a broker who was trying to say, well, another lender will provide a lower rate. And I'd said to him, like, you're not in Kansas anymore. If you're going to work in the private lending space, and to your earlier point about accreditation, yes, he's a level 2 agent, which means he did an exam and signed it. And now he's a level 2 agent, meaning he has access to private lending. But I was kind of saying to him, like, tell me more about the product that's being offered, because it's much more complicated on the private side. It's the rate plus the fees plus the terms plus what's going to happen potentially at renewal. And so in this one case, he's just back and forth on the rate as if we're negotiating between Scotia and TD. And I kept trying to say to him, like, you're missing out here. You're missing where the money's going to be spent. It's not necessarily here. If your client chooses this product over this product and this happens, they could wind up with a $50,000 or $60,000 penalty at this other competitor, because the way the competitor calculates the penalty is interest to term versus a 3-month penalty. And so this is a significant difference. You cannot sell the deal to somebody because I gave you, 599 and you wanted 579. That 20 basis points is not the difference here. It's the advice that's required that goes into this different product to make sure that you're giving the client a perfect, clear line of sight on exactly what they're signing up for. Because you're in the world of private now. It is not the same as alt or A. And I think, in part, that's why you're good at what you do, because you've been around long enough and you understand the tranches, and the conversations have to be different with clients depending on the advice you're giving.
Yeah, absolutely. Derek, what does integrity mean to you?
Well, deep question. I think integrity really is doing what you feel is right and will help you sleep at night. And if you're going to enter into any conversation or this is, we're talking business, even personally, when you're acting with integrity, you're doing kind of what meets your soul. I think it's deep like that. And I think that ultimately, if you can bring that kind of your best self to every interaction you have, it's not always easy. But if you can, and you're not necessarily tempted, because that's what the world surrounds us with. You can get up this morning and do your exercise and shower and be ready to go and leave the house with integrity, and you are surrounded by temptation every turn, whether it's temptation to spend money, temptation to, like the one thing I've seen in today's society, which I never would have imagined, is the new generation gambling on their phones. I never would have imagined that. Like, I love to play cards, not always for money. I love to play cards.
Yeah.
But never would have imagined that, there's a young guy sitting out there and he's on his phone and he's gambling on sports gambling all day. I could imagine him, texting his friends. All that stuff makes sense to me. It's just social interaction different than before. And so I guess just down that line of temptation, it's got us surrounded everywhere we look. And I think that your integrity could be questioned with almost every step you take throughout the day.
Derek, thank you for being here. And I look forward to having dinner again with you in your lovely Lakes Arena.
Yep.
You know what? I'm glad to call you my friend. And not just my colleague, but my friend. We have some really great, deep conversations. I appreciate being here with us today and sharing your perspectives. So thank you.
Thanks, Roy. Had a great time. Thank you.
You're welcome. Everyone, this Integrity Project?
Nope. Where can they find you?
Well, relax, dude. I'm getting to it. What a fucking guy. Always cuts me off. Jesus fucking Christ. Anyway, welcome. This Integrity Project. Derek, by the way, where can people find you? Fucking guy cut me off.
So do you want me to do
Listen, where can people find you? If they want to get in touch with you or get to know more about you, where they can find you?
Your Instagram handle.
Instagram.
Website.
Yeah, sure. So you can. I mean, obviously, for the private lending stuff, in all honesty, Roy's one of our best brokers, and so coming back through Roy to access Westboro, it's westboromic.com. So that's one spot you could check out the website. For an investor as well, like there's significant opportunity in terms of our fund. But ultimately, you can also check me out on Instagram, which is Derek Serra, and happy to have you follow along. It's a little bit about cooking, a little bit about cottaging, and a little bit about mortgages. And so if any of those three are interesting to you, then happy to have you follow. That would be appreciated.
Great. Thanks, Derek. And again, this is the Integrity Project, guys. You can find us at the Integrity Project on YouTube, RC Truth Academy on Instagram, and also on TikTok. If everybody else, thanks for watching and have yourself a great day.